What's going on, everybody? It's Jeff here. Welcome back to the channel. We have a whirlwind of events happening right now. I've been reading all over the internet, and I'm really trying to shake out some of the fluff and the dramatization and just focus on what makes sense to me. So in this video, I'm going to give you my take on exactly what is happening. Let's get right into it. First off, we still have the debt ceiling being breached, looming over our heads. October 18th is the deadline, and I've said it numerous times before. We've never defaulted on our debt, and I don't think this is going to be the first time. There are many loopholes in order to get us away from this. And we do hear, well, what happens if we do default on our debt? And so security checks won't go out, and all of the negative that's going to happen if we default. But what happens if we don't default? We are still in a position where we are spending astronomical amount of money and we are not taking enough in. The GDP is starting to slow a little bit. The economy recovery has started to slow a little bit. So I really want to focus on, well, what still happens if we don't breach that debt ceiling come October 18th. And a couple things stuck out to me as I was reading over the internet. First off, I want to highlight this right here. What happened with Bank of America? And I didn't realize there was an issue until I went to get into my Merrill Lynch account, which is my long-term, which is kind of shrunk right now, but my more swing portfolio. I've been using them for many years. I use TD Ameritrade for all of my quick plays, my day trades, but anything long term, I just am still comfortable with Merrill Lynch. I couldn't log into it, and I tried numerous times. It lasted for me from when I first went to access it. It was about an hour and a half. I understand there's a little bit of speculation on certain deadlines that they had to meet, but I will say this about Bank of America. Although I'm still a customer, I know they have a horrible history of abusing their customers and really looking at profits over their customers. In 2008, everything that happened, especially as they acquired another mortgage company, the defaults, and what they had did was taking full payments from their customers that were paying their quote unquote mortgage on time, rerouting it, saying it was an escrow payment because they over leveraged themselves. They've been known to do it before, and I would not surprise me for them to do it again. The next thing that sticks out to me too was this article right here from Jamie Dimon. He is the CEO of JP Morgan Chase, and he says America's largest bank is once again preparing for a potential US default, even though he expects Congress to avoid that potentially catastrophic event by lifting the debt ceiling. And he says right here, every single time this comes up, it gets fixed, but we should never even get this close, and it's all politics. So I started to read a little bit, well, why is he preparing for this? And it talks about just the fact of we're printing too much money, the cash flow, the GDP, the fact that the Fed is still buying so much of mortgage-backed securities and treasury bonds in order to keep things afloat, that there's just only so much time until eventually this starts to unravel. We're kicking the can down the road and seeing if potentially we can get out of this situation. One of those of like, well, we're not there yet, but let's just keep digging and maybe something will happen. Then I came across this article, which I highly suggest you go read it. It's by Robert Kiyosaki. If you're unfamiliar with him, he is the author of Rich Dad, Poor Dad. And whether you like him or not, or you never heard of him, I suggest everybody read that book. I read it multiple times. I first read it at a very young age. And if you are young watching this, it's a really good correlation of what is portrayed to you in the public school system, especially where I am up in the Northeast, in the public school system for what is more of reality, really gets you to think a totally different way. And he talks about this economic crisis that could potentially be happening in October. He talks about all of finances, not just stocks, Bitcoin, gold, everything. And he says this is going to be the biggest crash in the world. And I never like to read things that say, oh, it's going to be an 80% crash. This is going to be the biggest. You know what I mean? It's like seeing a sign at a restaurant. It's like, world famous, whatever. It's just like, okay, wait a minute. Like, let me see some accreditation here. But I don't like that over dramatization, but I do like what he says. We've never had this much debt pumped up. The debt to GDP ratio is out of sight. And he goes into talking about, Janet Yellen and Jerome Powell. And as they're scrambling, as we can see that they're continuing to push it, hopefully that they'll get out of this situation that we're in. And I'm not going to go through, like I said, I'm not going to go through this whole article, but it dives into much deeper of what potentially could happen. Talks about Evergrande, having 300 billion in debt. It's the most indebted company in the world. It's the second largest developer in China, and everything, they're trying to sell off some of their assets, and China's not going to be able to bail them out. And there's reasonings behind that, but this just all has me thinking of potentially what could happen and why we've been slowly preparing for this. We're not playing the long positions. We're going to get some, a massive, massive amount of opportunity to make a lot of money. And as he says here too, I like crashes. So this next crash is going to be really, really good. It's going to bring down gold, silver, Bitcoin, stocks, everything. But the news is a crash is a good time to get rich. Not only that, any stock like AMC that is heavily, heavily shorted will have some of those positions being closed. But it's also time for you to be able to keep your cash on the side, keep your reserves, and be able to get amazing deals, just like we did in March of 2020. I was a little bit slow in the market at a time period because things were a little overextended. I was very fortunate to have some experience and have some information when I saw the lockdowns in China and just seeing that it was going to carry over here, and I was able to get out of some stocks. By no means did I sell at the highs and buy at the lows, but I was able to just get some good gains, and we fully recovered and then some from that time frame. But this is why this is a really good time for everybody. If you're scrambling around and you're trying to focus on other stocks to get into, or you're sitting and waiting for AMC to do its thing, just know that you're in a right time. Just learn, start to see some of these patterns and to get information, get a good feel on for it. And these are the times, like he said, where individuals get rich. Now I want to give you a last correlation I'm seeing here. First of all, this is the SPY on the daily. It is completely broke its pattern that was continuously happening. This is the first time where we saw a dip. First of all, we broke through the 50 moving average all the way down to the 100 moving average. We haven't done it in about a year. And therefore, it hasn't made new all-time highs. And then again, we broke even to a little bit lower of a point. So this pattern has completely changed. One last thing I want to point out, which was a different correlation we're seeing. I said a couple times ago that AMC was starting to trend with the S&P 500, and it truly was. But take a look at Thursday. As the SPY, I believe, it opened, and I think it was about a 1.5% decline. 1.4, a little over 1.4% decline going into close. But if you look at all of the heavily shorted stocks, and I'm only going to cover AMC on this one, and AMC was the leader, it was absolutely completely different pattern. You can even take a look at GameStop, which had here, let me look at it. It's pretty much a similar pattern, but AMC was the leader. AMC had the volume coming into it. Okay. AMC had the range, had the percentage up, at everything, but there's numerous of heavily shorted stocks that we're starting to see a lot of pressure coming into it. And this is a very, very good sign that we are on the right path when it comes to the correlation being broken, because seeing SPY continuing to rip up to all-time highs and AMC trending with that is bullish when it's on a positive note. But seeing the SPY go down and the AMC actually being reverted, that's what's even the bigger note. So guys, that's it for this video. I'm going to continue to keep you posted, and I'll see you in the next one.